Okay, well, we might get started now. So just to get going on it, welcome and thanks everyone for coming. Just thought I'd do a bit of a webinar today on the tax effective ways to retain good employees in what I guess we can call this post-pandemic workforce. What a change or crazy what's happened as a result of COVID. So just to introduce, my name's Shannon Smith. I know I've met many of you that are on today. If you do need to contact me after this session, my details are here. We will be emailing out the webinar and then we'll also provide the notes as well to go through with it as well. I guess what we've been seeing at the moment is really this great resignation that's been coming out. I just grabbed a few different articles that are out and about at the moment. But really a big talk about a mass, they're expecting the Great Resignation. They have seen quite a bit in the US as well, and really looking at people might be moving jobs and changing around. So I just thought, what are some other ways that you can actually think about tax effectively, try to keep hold of those really good employees that you've got working for you at the moment. So if I go through and I'll just check, there we go. Sorry, just the technology here not working as well. Now, just to go through, I wanted to touch on today salary sacrifice. So what do we mean by salary sacrifice? And I'll touch on some areas, the company car, also work-related portable devices, then a bit about on-site meals, and then some on the minor benefits. So these are some of the tax-effective ways that you can kind of reward employees with more, but actually not costing the business more as well. So looking at some of the salary sacrifice arrangements, what do we mean by that? So this must actually be an arrangement under, I guess, under your employment requirements. It must be in place before the employee earns the entitlement to the income or whatever it is that you have that you're putting in place for the salary sacrifice. Now we can help you with it's literally like a one-pager kind of contract, I guess you could say, that you need to have in place as well. So the written agreement. And then with the salary sacrifice, what we're actually looking at too, quite often there might be an employee contribution to the arrangement, which is either an actual payment that the employee may actually make towards the arrangement as well, or there might be a set-off arrangement, so maybe part of their salary. So if they're doing a salary sacrifice, there may be that situation as well. The recipient needs to make the contribution if you are having that offset, and we do need to look at some of the factors around the timing which we can assess. So let me go through and give you some examples. I mean, there are, people have probably heard of the example of salary sacrifice of superannuation. Now that's actually where an employee may ask you to salary sacrifice superannuation, so put extra amounts into super. That comes off their wage, and they're making the contributions to super with pre-tax dollars. So it's going to save, in a sense, overall their tax that they're paying, but also will reduce the amount of cash that they're getting to themselves as well, getting paid as well. So just to talk a bit about salary packaging a car, is it really worthwhile? And I guess if we want to have a think about which is the most accurate statement of this, and I raise this because I think there's a few myths around it. You know, it's not worth packaging a car unless you're on the top tax bracket. It's not worth packaging a car unless you use it mainly for work purposes. Or is it that packaging a car can still be effective even when the employee is in a lower tax bracket and even if they don't use the car for work all the time? Or the last one, maybe it's, is it statements A and B are most accurate? Now, normally if I was doing this in a room, I could get you to all put your hands up, and I know you can kind of do that on Zoom. I can see if there's any anyway, or you can put in the chat what you think would be the most accurate statement. But to have a look at that it is an interesting one that a lot of people do believe it's A and B, but it's actually C. Packaging can still be effective even if the employee is in a lower tax bracket and even if they don't use the car for work at all. Now I'm going to give you some options and I'll show you how those numbers come out to go through. Now, just to explain a bit, what is a novated lease, or what is the lease? So in these situations with the salary sacrifice, you often see the employee enters into the lease. So they enter into the lease for the car. The obligations under the lease are then transferred to the employer until certain future events occur. So the employer is responsible for paying that lease, even though it's actually the employee that enters into it and the employee that owns owns the car in that instance. The employee cannot deduct the car expenses because it's under this novated lease with the employer, and there will be an FBT exemption for expenses related to a car fringe benefit. There'll be no fringe benefits, so that's that additional tax if the employee pays the residual amount and acquires the car at the end. And I'll go through some numbers to make it a bit clearer as to what I mean when I'm talking about this fringe benefits tax. And why is it that not everyone is looking at these salary sacrifice arrangements? They're very common when you talk about big business. A lot of big businesses offer these salary sacrifice arrangements, and we don't tend to see it as much with small business. And I guess part of that is probably the unknown of what it means to salary sacrifice. And I guess what I'm wanting to go through today, and this is where we can help you, is how can you actually provide what would be normally considered a big company benefit to your employees to get the benefit, and a little bit of paperwork to get that across the line, but at least you've got you're being able to provide that opportunity to your employees. So just looking at when we structure car benefits, what we're looking at doing, we calculate what would be the GST inclusive and exclusive car expenses. So those car expenses will be the lease payments. It'll be fuel if you provide fuel. Now, I do see in some instances fuel isn't provided if the person primarily uses the car for personal uses, but it's basically the rego, insurance, and the lease payments that come through. If there's a fringe a benefit being provided to the employee, because obviously on this car we calculate what would be what the fringe benefit that's being provided. So the fringe benefit is the benefit that the employee is basically receiving as a result of the car being made available. Now, to help neutralise that fringe benefit, there may be the employee may make a contribution of that amount. So that brings the fringe benefit tax down. Even though the tax is payable by the employer, the incentive for the employee in doing this is the fact that it actually reduces their wage or their salary package amount that has to go, in a sense, towards the car to actually help contribute. And when I show you some numbers on this, this will make a bit more sense. And then you're balancing that with determining the optimal salary packaging arrangement, how much of their wage is related to the car, and then what's the other part of their wage that you're actually providing on that. So if I use an example, an employee with an annual salary of $65,000 including super, and a car worth $30,000 under a novated lease arrangement, so just under a lease arrangement. And I'm going to assume for this calculation that there's been no business usage. I'll show you another calculation when you actually do get business usage, but this is being the most conservative. If you've got someone that doesn't use their car at all for business, I can show you what the benefit will be to them in you offering this salary sacrifice arrangement to them. So we go through and we calculate what would be the GST inclusive expenses, and I've just got lease payments, insurance, rego, petrol, services, tyres. I've made all of these numbers up at a guesstimate. The GST exclusive, why do we do that? Is because as a business owner, you get to claim the GST back as well. We then look at the fringe benefits tax value and liability. So this part is more for us as accountants, that we will calculate this part for you. But it's important to know that, because whilst you've got all of those expenses that you'll be paying for the car, on top of that, if there's a fringe benefit being provided, so that means you're providing the employee a benefit that they yet haven't paid tax on, that will be part of the fringe benefits tax. So we will do that calculation for you on that side. Once we've done that, we look at, well, what would be the employee contribution amount? Now, the employee may not actually contribute an amount. So if you've got the employees on $65,000, we've got that lease car. Now the employee may want to just take the additional amount, so to speak, in the fringe benefits tax, and that may be just taken from their wage. So when I show you the table in the next few slides, you'll understand what I mean by there. Or they may at year end make this contribution back as to neutralise what we would call the fringe benefits tax. And the benefit for them is it overall as an employer, you're going to want to pay a maximum amount of the salary. And then in this case, it's $65,000. So it's about calculating it and trying to get to the overall net outcome that's a benefit for the employee. There will be a GST liability for the employer when they receive this $6,000, and the net proceeds that the employer get is the 5,455. So looking at the different options, and if you do want to go through this, we can actually then calculate it with real numbers for your particular team member and car that you're looking at, and their wage, and again also potentially how much business kilometres you're able to justify that they're going through. But if I just use a very raw example, you could say is employee is paid $65,000. There's no salary sacrifice, no car, no nothing. They have their SG amount. Actually, I should update my table. Sorry, that should be 10% now. That was still at 9.5%. So I should update that. And then they have an after-tax cash of $35,284. So there's no car, no nothing. They just get their wage. If we have a situation where the employee doesn't make that contribution, and that contribution is to bring down what is the fringe benefit, that benefit they're receiving that they have not yet paid tax on, if they're not making that, and that may be a choice that both of you in a sense make, then you will see that whilst you might have a salary package with them of $65,000, to achieve to pay for their car, because they're happy to take a car, and you've said, well, I'm not paying more than $65,000 as a total wage inclusive of the car. The salary sacrifice amount is $16,548. So that means on their pay slip, if we're looking, say, on an annual basis, it's $65,000 less the $16,548. That becomes the base that they're then paying tax on at that point. Now, there will be, though, in addition to that, what we call a reportable fringe benefit, because they've received a benefit. This goes onto their pay slip, and you as an employer have paid, fringe benefits tax is 47%. So you've paid just under half that in tax. Now, that tax amount will be indirectly included above here, because ultimately you're saying to the employee, well, you're getting paid $65,000. This is about how I can slice and dice different aspects to give you a better net cash outcome. The other one is then when the employer actually makes that contribution back from what we call post-tax dollars. So when they've done it up here in salary sacrifice, that's pre-tax dollars. And then up here, it's in post-tax dollars that they've actually made that contribution back in the post-tax dollars. You can see, I guess, from the pre to post-tax dollars, there's only a small amount of difference. But what we can see overall is if they don't salary package a car, what's their take home versus what is their take home if they actually do salary package a car, remembering that if they don't salary package a car, they'll be paying that from post-tax personal dollars, so to speak. So there is a reduction in the SG amount of 497. The end result is the same cost to the employer, but there is an increase in the after-tax cash to the employee of $2,602. So the employee has salary packaged a car, whether they've made the contribution or not, there wasn't too much difference in that, but they've actually been, by salary packaging a car, they've actually been able to end up with after-tax cash dollars of $2,602. And that's someone on a $65,000 wage and a $30,000 car that's not used for business purposes at all. If it's used for business purposes, there's going to be quite a big difference, because you don't have that private add back. All of a sudden, that private add back might be, if they use it half for business, then the private add back will only be half that. So all of a sudden, you can see a lot of benefit coming through from that. It doesn't always have to be that the employee owns the car under the novated lease. It could be that the employer provides the car. So I'm using an example here. If the employer provides the car to the employee, often they would then brand it and use that as marketing, etc. as well. And it would be expected that the employee uses it for business. It may not be all for business. It may only be 20% for business, 50, maybe 70 or 80% for business. But often you'll see a lot of the, when you see people around with branded cars, usually the employer does own that car. Most likely the employee doesn't want their employer's branding all over their car when they buy themselves a car. So there's an assumption that there would be a certain percentage used for business. You would need to keep a logbook for that. The higher the business percentage, the lower the fringe benefits tax is in relation to that. So I've just used some numbers to give you an example. Same total car expenses, so that's your lease payments, your fuel and rego insurance. Now, assuming that the car is also used for business, the fringe benefits tax comes down a lot. So now if I go back just for example, if the car's not used for business at all, we're talking about 47% of this 11,321, so over 5,000. If it is used for business, and I've just used a percentage there, you would need a logbook to support that. The fringe benefits tax cost is actually a lot lower. So what we're seeing here, employer owns the car. Now the employer can have it on lease, so obviously that's where I've got the lease payments in here. The total cash cost to the employer is $12,985, and yet the net value to the employee after tax, right? So the after tax value to the employee is actually $10,862. Why do I say that? That's the car expenses. So if the employee took their wage from you, so the $65,000 tax, etc., took home their pay packet, and then went and bought this car and did the lease themselves and did all the expenses, they're going to have the same total cash outlay for the expenses in their after-tax dollars. It doesn't include the FBT because they purchase it personally. But what does that mean from a pre-tax perspective? So the net value to the employee pre-tax, what would they have to earn pre-tax to achieve a post-tax dollars of $10,862. Now I've just used this on the marginal tax rate, and an employee would actually have to earn pre-tax $17,241 to achieve the after-tax of $10,862. Now, when you look at it here, you've got total cost to the employer. So this is the cost to you, $12,985 a year in this particular car. Yet the value to the employee is actually $17,241. So there's a huge extra value to the employee in pre-tax dollars that they would have to earn to achieve the same net outcome. So there can be a real benefit, a win-win benefit for both parties on that situation. Some of the other ones that a lot of people do overlook this as well is that and this has only probably been in the last few years, there's been more changes around this area, but portable electronic devices, mobile phones, iPads, all of those types of things, there's actually an FBT exemption for those. So what that means is that an employee could salary sacrifice. So if you hear your employee say, oh, I'm actually getting I'm buying a new mobile phone. Now, the benefit of you offering the salary sacrifice, it's not that much harder to put it into zero. We can always show you how to do that. But if an employee goes and buys a new mobile phone and it's $1,000, there's going to be GST attached to that as well. And they have the ability of paying for this with pre-tax dollars. So instead of waiting till the end of the year and then paying, claiming it maybe as a deduction and going through that process. So by you offering the salary sacrifice for, whether it be iPads, computers, and phones, they have to be that there is a link to them using it for work in a sense. So these are not ones that you're buying for them, but they want to buy, a new mobile phone and replace their mobile phone. So that's something that we can help you with, because what it means to the employee, they get to save the GST on it because you as a business get to claim the GST. So they get to save the GST on it straight off the bat. And then on top of that, they get to pay for it with pre-tax dollars today rather than waiting till after the end of the year. So it's all small amounts that will add up over time. Also, just to touch on what we call, and this is just if there are, in a sense, certain other expenses as well, you can salary sacrifice other expenses that we would be otherwise deductible. There can be, as I just mentioned before, like the GST benefit, like the iPad or computers. The GST benefit, it must be deductible, and the recipient of the benefit must be an employee. And this really benefits the employee and you know, you can also do this actually for the associate, their partners as well, on some of the aspects. It depends on the expenses that you're looking at, but it's just something to keep in mind on otherwise deductible. If the employee could have claimed it themselves, being able to salary package that item and pay for it in pre-tax dollars and get the benefit of that today can make a big difference as well. The other one is on-site meals. Many people aren't aware that, and obviously there's a lot around entertainment when you take someone out, you know, and in this example, if you have a meal that's more elaborate with wine and all of that, that's kind of considered entertainment, disallowed by the ATO. But if an employer provides sandwiches or drinks for a working lunch or something at the office, or provides it in, you know, the fridge, so to speak, the food there, that is tax deductible. It's also exempt from FBT and can work towards creating a good working environment, I guess, with your team, and to be able to, you know, reward them a bit more on that side. We also have another one to think about too, is minor benefits. So it must be less than $300 in a year, can't be salary packaged, and it must be infrequent and irregular, so that you're providing a benefit. You're providing a benefit to them. There is some ATO new safe harbour guidance on it, but this is where you might often see employers look at giving, you know, like a voucher of less than $300 to their employees. There's no FBT on that particular, when it's a minor benefit, it's infrequent and it's irregular as well. So that's another way as well that you can really look at like providing some additional benefit. So just a quick little, I guess, webinar. I've had a number of people raising concerns about the Great Resignation and what might be happening. So I just wanted to pull out a few ways that you can really kind of reward your employees with a bit more, but also doing it tax effectively really gives a win-win for yourselves and also for the employees too. So I'll open it up to questions if anyone's got any particular questions on anything that I've covered at the moment. If you want to put it in the Q&A, I can't see any questions just yet, but if you do have any examples yourself where you want us to look at doing even just a quick calculation on one of your employees, what you're looking at potentially, whether it be a car, and what that number, the end dollars take home difference may be for them, I'm happy to take a look and see how we can help you with that one. Have we got any? No, have I answered everyone's questions maybe? So yes, just go through our leadership team. I know many of you have met myself. You've probably seen also Paul as well on many of our webinars, and also Daniel. Feel free to reach out to any of us to talk about some of these issues and how we might be able to help you, you know, kind of salary package or salary sacrifice for your employees. And if you've got any other questions, let us know. I don't have no questions that come through. That's a good one. I've just got a question. Anything to know about giving away extra leave to employees? That's a great one, actually. That's a good one on giving actually extra leave. That's kind of something that, in a sense, it costs you but doesn't cost you, I guess you could say. Giving extra leave, you know, I know I given everyone a birthday, like their day off for their birthday, so yes, it is an extra leave day that you're providing. Hope is you're getting more back in that culture that you create within your business as well, but you can give the extra leave as part of their package, and I guess would be you know, it may be maybe you've then technically increased their overall package, or you've just added the extra leave, which does ultimately overall add to the total cost of the business. But the leave, some people would value the leave more than potentially maybe the financial side of that as well. So that's a really good one. Any other questions? No? Well, thanks for joining for this short and sweet, just straight to the point webinar. I just wanted to go through a few areas, and if you do have examples, feel free to reach out, and I will I'll be able to calculate something and go through that with you. Thanks very much.